Hello guys, welcome back to the last video in this series where we are solving the specimen question paper from ISC 2022 semester 2. If you have missed out the previous videos, do check out the entire playlist in the description box below. And if you don't want to miss out any future videos, then you have to click the subscribe button and hit the bell icon to receive notifications whenever a new video is shared. Okay, and this is a sum on cash flow, cash from operating activities, and as you all know, operating activities is a little tricky and it requires a lot of conceptual understanding, and this is also one of those sums. If you are not clear with your concepts, you might end up doing mistakes. Let's have a look what all do we have, and we will again pick up the items as we go along for ease of understanding. Here we have Anjana Limited, who reported a profit of 80,000 for the year ending March 21 after considering the following. So this is the profit after tax. So that goes into our NBT calculation, net profit before tax calculation. Net profit after tax is 80,000. The first item that we have is tax provided during the year is 4,000. So that is like provision for tax that gets added here 4,000, and 84,000 becomes our net profit before tax because we don't have any other adjustment regarding dividend or transfer to reserve. And that goes into your main cash flow, net profit before tax, working note 1, 84,000. The next item that we have is amortization of patents, 10,000, straightforward given in the question. So that goes into your adjustment for non-cash and non-operating items, 10,000 here. That gets added as an expense. Profit on sale of vehicle 3,000, that gets subtracted from this adjustment only. So profit on sale of vehicle 3,000 is subtracted. Any profit or any gain which is non-cash or non-operating in nature is subtracted, if you remember. Writing of prelim expenses of 2,000, if any expense is written off, that is also added back here. So 2,000 gets added here as prelim expenses written off. Okay, up till here things looks little straightforward. However, now comes the interesting part. During the year, machinery costing 40,000, where we have accumulated depreciation there of 18,000 was sold for 6,000. Okay, and we have the plant and machinery balances given as well. Always prepare the plant and machinery account. During this case, don't try to use a shortcut method of calculating because you might end up doing a mistake. This is the plant and machinery account that we have. Let's have a look. The opening balances are put here. The opening balance is 1,30,000. The closing balance is 88,000. So balance BD 1,30,000, closing balance 88,000. There is a machinery that was sold for 6,000. So by bank, sale is 6,000 here. The cost price of the machine is 40,000 and there is an accumulated depreciation of 18,000. That means here the book value of the machine on the day of sale is 22,000. 40,000 minus 18,000. And if you're selling it for 6,000, that means there is a loss. So loss on sale is book value minus selling price, which is 22,000 minus 6,000, 16,000. Okay, so this is put here. Now, however, if you now, after putting these three amounts and here one amount, if you try to tally, the account will not tally. And that is why it is very important for you to prepare this account to find out that missing link. So if there is a shortfall on the debit side, we generally call it purchase of asset. But here we already have a sale. So any shortfall on the credit side goes as depreciation. This is the balancing figure that you need to calculate. Okay. Students might end up taking this 18,000 as depreciation during the year, but that is not correct. This is accumulated depreciation over the years, right? And we don't add this in the cash flow as a part of operating activities. So this 20,000 should go as your adjustment in operating activities. This one, be very careful here. There is a lot of chance you might end up doing a mistake. Okay. Having done these adjustments, 16,000 also comes here, the loss on sale of machinery, don't forget that. And we get 1,29,000 as operating profit before working capital changes. Now, if you look at it here, Trade receivables, there is an increase 4,000, so this is subtracted here. Inventories, there is a decrease of 3,000 that is added here. Cash at bank doesn't come in working capital changes. Trade payables, there is a decrease of 2,000 that gets subtracted here. Even marketable securities don't come here because these are considered as cash and cash equivalents. Plant and machinery we have already taken. So after doing this additions and subtractions, we get final figure as 1,26,000, which is net cash from operating activities. Hope this was helped you to understand things at a concept level, because if your concepts are clear, you would be able to solve even the difficult sums and the tricky ones using your knowledge and understanding. If this really helped you, hit the like button, do share with your friends, and if you have any questions, do let me know in the comments box below. I'll be more than happy to help you out. Stay tuned to this channel for more upcoming videos. If you have any specific video you want me to make, do let me know. I'll be making a video on that topic as well. Thanks for watching.